from 29.2% in a bid to reduce debt. But such a transaction is not easy, according to the Chief Executive Officer Tadeo Marocco. The Finance Ministry rules out the merger of PSU banks. A document issued last week creates some buzz, but the ministry issues a revised document to meet select banks and insurance firms, but makes no mention of merger. Zee seeks an extension of the deadline of the merger with Sony as the first deadline to complete the deal nears. And JSW Group Managing Director Sajjan Jindal denies all allegations of rape. In a statement issued on his behalf, Jindal calls the allegation false and baseless. Now, after Indian equity markets charged into uncharted territory on Friday, the question that many will likely be asking this morning is whether that momentum is set to continue. Here's some information that will help you get a better sense. Some part of that momentum was on account of foreign institutional buying. FII's net bought equity worth over 9,000 crore rupees just on Friday. And that likely encouraged the broad-based gains across the board. Now, an explanation of that increased interest is a risk-on sentiment that is pervading globally, and that's after an interpretation of the Fed's latest policy statement suggested that there would be 3 rate cuts in 2024. But 2 Federal Reserve officials have pushed back on growing expectations of a cut in interest rates as early as March. New York Fed President John Williams has said in an interview that it's too early for officials to begin thinking about lowering borrowing costs as they consider whether policy is restrictive enough to get inflation back to 2%. And separately, Atlanta Fed President Raphael Bostic, who votes on monetary policy next year, told Reuters that he expects 2 rate cuts in 2024, but not starting until the third quarter. That's according to a Bloomberg report. Now, we're likely to see some action in ITC today, and that's because of news over the weekend. ITC's largest shareholder, British American Tobacco, is considering reducing its stake in the company to 25%. Now, according to the official, that's not going to be too easy. We're joined by Sessa to give you some perspective on what this is about and whether this is indeed something to focus on. Morning, Sessa. Where was this statement made and what is the context?
Right, Alex. Good morning. So what basically happened is, during the weekend, the last week rather, on December 6th, so it was British American Tobacco's full year trading day. And there the management of British American Tobacco has highlighted that there are 2 key points when it comes to divesting stake in ITC. They are, in fact, looking to dilute their stake from 29% to 25%. As they are looking to reduce their own debt. But now the 2 key points that has been highlighted is one, the India's FDI rules. So India imposes strict restrictions and limitations on foreign ownership in domestic tobacco companies. So that makes it difficult. And the second is that the RBI approval. So that is again, that poses a key headwind for the possible trimming of stakes. Now, the management highlighted, and I quote them, there are specific RBI rules that are required, in respect of taking any action about their stake, and this adds a significant level of additional bureaucracy. Now, the BAT CEO also is, however, hopeful that the ITC continues to perform well, and it is accretive for BAT in terms of performance. However, it remains one of the most undervalued FMCG companies in India, despite having a strong share price performance over the last couple of years. BAT sees a longer runway for future price outperformance and value creation in ITC, since there are plenty of opportunities for share price to continue to grow. Even ITC's plans to demerge its hotel unit, Morocco, the management of BAT, they indicated that they have no intention to be in the hotel business, but due to the FDI policy that is, kind of related to the tobacco business, could actually hamper their plans to trim their stakes in the hotel business as well. So we do need to look out for what happens. This is a very important development that we need to keep an eye out for.
All right, thank you so much, Tesha, for joining in and giving us that perspective. ITC, by the way, is up as of Friday as much as 38% from the start of 2023. Let's talk about the major cues that you should take into trade today. And Agam is standing by to tell you something about what you should pay attention to in the F&O space. Agam, good morning. What a day on, what an end to the week.
Yeah.
Do we continue that momentum at the start of the week?
Yeah, the buying on Friday took a lot of traders by surprise, pardon me, and this is largely on account of the big cash number that we have seen. So while we were expecting a little bit of moderation towards the second half of Friday, that really didn't come through, and in fact, we closed near day's highs. And on account of that, while we didn't see too much increase in open interest as far as the futures go, we have seen the index rise. The question really is, at what point in time can you consider these indices being overbought, at least in the near term? That is something that will be answered through the course of this week. But for now, we're seeing and continuing to see strength building in. As far as your Bank Nifty is concerned, the picture wasn't very different. An up move of around 1% and about 5% added towards fresh longs in the Bank Nifty futures. As far as your option markets is concerned, well, quite clearly the 21,000 mark is now out of the picture. In fact, that becomes a very firm base for now. And we're seeing a lot more writing around there as far as puts go. And on the higher end, I reckon that 21,500 will act as a little bit of a near-term resistance. Of course, in the longer term, we do have 22,000 as the one with a firm resistance based on open interest accumulation. But that's something that we're going to keep an eye on, perhaps in the longer term as we move into January. But for now, we're seeing a little more writing around 21,300, 400, and 500 puts. And we're looking at this firm base building around there. Let's talk about stocks then. And we do have longs building up in Nalco along with Oracle Financial Services. Nestle, ICICI Prudential, and HDFC Life under pressure, where we have seen shorts building in there. And in terms of stocks, which saw unwinding in trade, well, longs unwinding in Max Financial, HDFC Bank, and Dr. Reddy's. On the other hand, SAIL and Hindustan Copper from the metal pack, which in fact was one of the bigger sectors to have aided this up move for the benchmarks. So fresh longs. On the whole, Alex, we continue to keep an eye on the Nifty, but there could be a high probability of that slipping into a range at this point in time.
Right. Thanks so much, Agam, for bringing us those details. By the way, Asian markets have mostly opened lower. You have the early risers, of course, the three early risers that were trading with cuts. And you also have the Hang Seng, which is trading with cuts. But you have a couple of the Chinese benchmarks onshore that are trading with very minor gains at this juncture. At this point, also, I must point out that the bond yield on the 10-year Treasury is continuing to trade well below the 4% mark at 3.93% the last I checked, and that continues to be supportive for risk assets globally. Now, we have to slip into a very quick break. We've got stock-specific action to tell you about after that, so do stay tuned. Welcome back. You're watching All You Need to Know. It's time to take a look at stock-specific action and the stocks that are likely to buzz in trade today. We're joined now by Anushi Vakharia to tell you some of those stocks. Anushi, morning. What's on your list today?
Morning, Alex. Quite a bouquet of stocks that I would like to present today. So let's start off with the pharma major Lupin, wherein the company has received US FDA's approval for 2 of its drugs, excuse my pronunciation here, which is allopurinol tablets and sitagliptin tablets, for which have an estimated annual sales of about $88 million and $5,780 million respectively. Now, moving on to Wellspin Corporation, the company's recent acquisition, Syntex, will invest up to rupees 807 crores for setting up a manufacturing facility in Telangana, which would be responsible for manufacturing plastic pipes, your water storage tanks, and sandwich molded tanks. This is in view of the company's foray to grow their plastic pipes market, wherein the growth rate is about 10 to 12% CAGR. Next is the much-awaited news on the Zeal-Sony merger, wherein Zeal has requested Sony India to extend the timeline for the merger. So with this, the merger allows about 3 extensions of deadline, with this being the first one. In other news, even Sasha Mirchandani and Vivek Mehra failed to get requisite majority votes for being reappointed as the non-executive independent directors of the company. Interestingly, even Elara has come out with a note wherein they are positive on Z and expect about 23% upside on this stock with the expectation of merger timeline, and see a high likelihood of the merger going through without Mr. Punit, and then thus expect the merged company to get listed by March or April of 2024. Now we have Masgao Dock, which has received orders of $42 million from its European client for construction of 3 vessels. If you look at the order book of last quarter, that is September, the order book stood at about 37,500 crore, and the company did expect a 12 to 15% increase in its top line over 2022 to 23. Now, in an unfortunate incident at Solar Industries, Nagpur facility, there was an explosion which resulted in about loss of 9 lives and 3 serious injuries in that facility. The state government has taken an action to provide of up to rupees 5 lakh to the deceased families. They are also inspecting on the financial loss, which the company states is pertain to one building only. And in the last, we have Gandhar Oil Finery, which came out its Q2 FY24 update, wherein it saw its revenue, margins, and net profits seeing a drag in all these 3 key operating metrics, with revenue being down at 6.5%. Margin also saw a bit of contraction of about 27 bips due to higher raw material cost, and net profit also saw about 11.4% decline. So if you look at the IPO's listing performance, the issue had received about 66 times subscription, with a stellar debut of about 76% gain on its listing day. So we have to look out for what is the reaction of the market today with this.
No,
so
certainly.
Yeah.
All right. Thanks so much for bringing us those details, Anushi. And by the way, also take a look at the working capital or the short-term borrowing of Gandhar, which has gone up quite substantially in the second quarter. And you've also seen the number of working capital days go up quite substantially. I believe, if I'm not mistaken, it went up to 58. But we'll bring you more details over the course of the next hour or so before the start of trade. Now, let's talk about sugar companies. And you will remember this as a headline from last week. The government lifted the ban on the use of sugar. Remember, the government had curbed using sugar for ethanol production on the 7th of December. My colleague Mahima is here to tell you the impact on sugar companies and also the other stocks on her radar today. Mahima, morning. What do you have for us?
Morning, Alex. So as you rightly said, on 7th of December, the government had notified that it has curbed ethanol production from sugarcane juice, sugarcane extract and B-grade molasses of sugar. However, on 15th, that is on Friday, the government, through its notification, gave some kind of relaxation where it mentioned that now ethanol can be produced from sugarcane juice and B-grade molasses. However, they've capped it at 7 lakh tons of production. They've also said that this kind of ethanol production will be restricted only up to 7 lakh tons. However, this will be only from juice and B-grade molasses. There were several sugar stocks that were affected on 7th of December because of the curbing, which were, and these stocks include Balrampur Chini Mills, which was affected over 5.8%, then BCL Industries, which was again affected over 5.8% throughout from 7th to up to 15th of December. Then there was Gulshan Polyols, which was down by 4.5%. We had Bajaj Hindustan Sugar, which was down by 4%, followed by Sri Renuka Sugars, Triveni Engineering, and Dalmia Bharat Sugars. So all these sugar and ethanol stocks are definitely on a radar, to watch out for today, because after the government has made some kind of relaxations, these stocks are likely to pick up. Then we have Indian Bank. A few other stocks to watch out for will include Indian Bank, which are on my radar, because Indian Bank plans to raise approximately 4,000 crores via QIP. The shares that are being issued stand at 10.15 crores. The floor price is 394 per piece, and they are issued at a discount of 4.9%. The stock has gained over 60% in the past 6 months, which is a good sign. Then we have Tata Power, where the company has signed pacts with NTPC for supply of solar modules. Now, this will be taking place in Rajasthan, and the project value stands at 418 crores. Tata Power has recently also signed an agreement with IOCL for deploying 500 plus EV charging stations. And if you look at the solar EPC book as per the recent investors presentation, the solar EPC order book stands at 18,700 crores, which is a huge number. The stock performance, if we see, the stock has grown over 54% in past 52 weeks, and the stock has picked up over 50% in the past 6 months itself. On the last stock on my radar today is NBCC. The company conducted an auction for the sale of 2.23 lakh square feet in the World Trade Center in New Delhi, and this was on behalf of, they were acting as a marketing consultant on behalf of Ministry of Housing and Urban Affairs. The commercial inventory was worth 905 crores, and total assets that were sold through e-auction stand at 9,656 crores. They also received a recent order of construction of 1,469 warehouses for 1,500 crores. So their order book also stands pretty strong. If we talk about the stock performance, the stock has been up 99% in the past 52 weeks and over 36% in the past 3 months. So these are some of the stocks to watch out for today in trade.
All right, thanks so much for that, Mahima. Let's talk about Zee, and the latest update here is that Zee has sought an extension of the deadline for the merger with Sony as the first deadline to complete the deal nears. What's the context and what's at stake? Sajid Mangat is joining in to tell you more. Sajid, I guess to a certain extent this was to be expected, but what can you tell us about this latest development?
That's right, Alex. It's clear now that the Zee will not be able to meet the December 21st deadline for completion of the merger. And that's primarily because there are differences which are there between both the companies, between Zee and Sony, with respect to who will be controlling or who will be the key managerial person after the merger is completed. As per the earlier agreement, Puneet Goenka was supposed to be the MD of the merged entity, but because of the kind of regulatory scrutiny that has come on Puneet Goenka, Sony is now in a bind because they want their own representative to be the MD of the company. And that's something which in the next few days or months we will come to know, provided Sony agrees to extension of the deadline. Now, as per the agreement which they have signed, they can extend the deadline by up to 3 times, and they have now sought for the first time this extension of deadline. Now, it needs to be clear that it is Zee which is seeking extension of the deadline, and it's not both the parties who have agreed upon it. So Sony has to respond whether it agrees to extend this deadline or not. In the meantime, there has been some boardroom churn that's been happening in Zee Entertainment. 3 of its independent directors have been replaced by additional directors who will be in independent charge, and that's primarily because one of the directors, Adesh Kumar Verma, he withdrew himself as from being nominated or from being reappointed as independent directors, and 2 other directors, which includes Sasha Mirchandani and Vivek Mehra, failed to get the shareholder approval at the AGM. In place of that, Zee has appointed 3 independent directors or additional directors as of now, which is Venkataramana Murthy Pinisetti, Shishir Desai and Uttam Prakash Agarwal. These 3 gentlemen will be additional directors on the board of Zee Entertainment, but they will have to seek approval from the shareholders, and it needs to be seen how the shareholders are going to vote against these 3 additional directors to be nominated as independent directors on the board of Zee Entertainment.
Thanks so much, Sajid, for bringing us those details. And in fact, we will bring you more updates as and when that voting takes place. Now, Motilal Oswal has released its annual wealth creation study, and there are a few of the regular suspects that make the list, and a few, in fact, that are possibly going to be surprises for you. Himansh is joining in to tell you more. Himansh, what's on the top of that list?
Hey Alex, so Motilal Oswal's wealth creation study has yielded some interesting results. The regular suspects are there, and the big ones really, you have the likes of Reliance, TCS, Infosys, but more of that, I'll lay out the land for you first. So wealth creation, simply defined, is the incremental market capitalization that has been added over the past 5 years. And now the study ranks it on 3 categories: the biggest wealth creators, the fastest wealth creators, and the most consistent wealth creators. And one key thing to note, these suspects, or rather the sample, is taken on the basis of the ones that have outperformed the benchmark, which is the S&P BSE Sensex. And well, let's take a look at the biggest ones, and these are the ones that have added the most amount of market capitalization over the past 5 years. And you would see the likes of Reliance Industries, that is there for the 5th time in a row. It has added 9.64 lakh crores over the past 5 years and returned it to shareholders. And then you have TCS and ICICI Bank. Then you have the likes of Infosys and Bharti Airtel. And if you take a look at the most consistent wealth creators, this is where the new ones come in. Capri Global, the one that has just forayed into insurance as well, has outperformed the BSE Sensex for 5 years in a row and has a 5-year price CAGR of 50% compounded annually. Varun Beverages, okay, let's take a look at the fastest wealth creators. You have Lloyds Metals, Adani Enterprises, Tube Investments, and so on. And well, overall, what's one key thing to note in this industry, in this study, is economic profit over accounting profit, which takes in the amount of equity value into the profits that are there. And lastly, if I were to just state 2 key takeaways, one would be that mid caps and small caps are the likely outperformers in the coming year. And lastly, PSU banks and PSU enterprises in general are on a comeback and likely to deliver healthy growth in the coming years.
All right, thanks so much, Himansh, for bringing us those details. One last key update in the banking space. There's been a lot of buzz in the PSU banking space, and there was a document issued last week that created some interest about whether or not more mergers are on the cards, but that does not seem to be the case based on the latest development. We've got Vishy joining in to tell us why. Vishy, a revised document that was sent out?
Yeah, Alex, if much ado about nothing had a situation, then this would most likely be it. Basically, with what happened on the 14th of December is that the Finance Ministry issued a circular calling for representatives of multiple 4 public sector banks as well as some insurance companies to come and meet the Lok Sabha Committee for Subordinate Legislation. Now, in that document, the term that was mentioned was, apart from Banking Regulations Act, they would also discuss a post-merger scenario. That sort of created this interest among people whether more merger or more consolidation is expected within the public sector banking system. 16th of December, the Finance Ministry issued a revised circular which removed this term of post-merger scenario, and that more or less rules out any kind of discussion. Now remember, this Committee for Subordinate Legislation essentially is built to see whether the rules or acts that have been implemented or amended over time to time are being executed properly on the ground. So their job is more of an academic exercise. They conduct these studies, they talk to representatives of various banks as well as insurance companies and other public sector entities in the country, and then submit their report to the government. So the entire discussion is purely on an academic basis. At this point in time, there is no consolidation that is being planned within the public sector banking system.
Right, and we'll have to watch that pack of stocks very closely today. Thanks, Vishy, for bringing us those details. That brings us to the end of this edition of All You Need to Know. But there is a lot more to talk about before the start of trade, and you'll find all of that right here on NDTV Profit. Coming up next is India Market Open. Do stay tuned.